Assalamu alaikum. It is recognized that sustainability standards and reporting would be something that's new for many of us. However, the international developments in this area are moving at a very fast pace, and sustainability standards are on the horizon. We would be discussing the two standards that have been issued by the International Sustainability Standards Board, and the final set of these standards are expected by end of this year. So just to explain the context in which these international developments are taking place and the push for sustainability reporting, I would start with a brief introduction of International Sustainability Standards Board, because the establishment of this board is a critical milestone in the journey towards investor-driven sustainability reporting. I will also touch upon the board's approach towards the development of the standards, and then we will move to the exposure draft, the IFRS S1 or Sustainability Standard number 1, which outlines the general requirements for the preparation of sustainability reports. And in slides, I will highlight the core content and the key aspects of this standard. So to starting with International Sustainability Standards Board, that what's it's all about. So we need to understand that who has been demanding the sustainability reporting. And basically the investors have been asking for and demanding for complete, comparable, consistent and verifiable sustainability reporting so that they can make more informed decisions about investments in entities. So the push was coming from the investors, and though various organizations have been working in this area, for example, Sustainability Accounting Standards Board, TCDF, Value Reporting Foundation, there are many organizations who have been working on sustainability and developing the frameworks and the standards. But because of the presence of these organizations, there was fragmented approach. So the information that was provided by the companies on different frameworks was not comparable, it was inconsistent. And as a result, investors were not able to make, you can say, more informed decisions based on the prospects and sustainability of the entities. And as the investors also pointed out that the information that's provided in the financial statements is not sufficient, is not complete, and they need additional information on the long-term prospects of the entities. The solution to this need or problem was provided by the IFRS Foundation. And IFRS Foundation in November 2021 last year announced the establishment of International Sustainability Standards Board. The idea behind the establishment of the board is to develop sustainability standards that meet the needs of the investors. And the board would be basically consolidating the work of the organizations that have been previously working in this space. So they would primarily not be reinventing the wheel, rather they would be consolidating the existing frameworks and focusing on the information that can contribute to the or fulfill the needs of the investors. And because this board has been established under the IFRS Foundation, so the idea is again to put sustainability reporting on the same footing as the financial reporting. So in this way, the companies will be ultimately, you can say, held responsible for sustainability reporting as they are for the financial reporting. So this is the objective of establishment of the board. The board has also support and endorsement of leading economies and regulators from various jurisdictions. And it is expected that the set of standards that this forum would be issuing in near future, the final set of standards, would be adopted by various jurisdictions. And ultimately, we can say that like in financial reporting, the IFRS accounting standards are common language for financial reporting across the countries, across the borders. The standards issued by this forum would become a common language for sustainability reporting. Well, sustainability has no single definition, and I was reading an article where it was quoted that there are probably over 200 explanations or definitions of sustainability. And ISSB or the board has not proposed a definition of sustainability. However, it has highlighted that the ESG risks and opportunities that impact the enterprise value of an entity are linked to sustainability. SASB, which was a forum which has been developing standards, industry-specific sustainability standards, it also explained sustainability on the lines that it's the corporate activities that maintain or enhance the ability of the company to create value. So sustainability is linked to something that creates or maintains the value of the entity. Well, when we talk about sustainability reporting, then it would be the management, measurement, and reporting of sustainability related risks and opportunities that could affect the enterprise value. I'm mentioning the enterprise value for the reason that these standards are focused towards investors, and investor decision making is linked to enterprise value. I will explain in the coming slides more about the enterprise value and how investors can now use this information on sustainability along with the financial reporting to make informed or better choices. So to summarize that, what is the focus of ISSB? ISSB's focus is to develop a baseline. That's the minimum set of sustainability related information that the entities should provide. And by baseline, it also means that the jurisdictions and regulators can enhance or improve or add, I would say, to these minimum requirements that have been set. It would be consolidating the work of existing organizations like TCDF, like SASB. So as I mentioned that it would not be again working or developing new standards, rather it would be initiating its work from the existing resources. And it would also be using the human capital of these organizations, as it has inducted the resources from these organizations within ISSB. And the objective of ISSB would be investor driven or investor relevant information. Like financial reporting is investor driven. It provides information to the primary users of financial statements who are providers of finance, whether it's in the form of lenders or creditors. So again the information about sustainability through these standards would be focused towards investors, so that investors can make decisions by reviewing or by studying the financial statements of an entity as well as its sustainability report. So the sustainability report will provide the long-term prospects of the entity, whereas financial reporting would be primarily providing the historical information about the entities. So the combination of two would provide the overall value of the organizations. And lastly, sustainability reporting would be integrated with the financial reporting in the way that the reports generated or the sustainability reporting would be for the same entity, for the same period, and at the same time. So for example, if the entity has an annual year end, let's say December, so it would be producing sustainability report along with the financial statements. Now moving towards IFRS sustainability disclosure standards, the approach highlighted by the board is that it's a building block approach. The building blocks approach means that the financial reporting developed by different bodies or boards. For example, it can be IFRS based, developed by ISB or GAAP, US GAAP, along with the sustainability disclosures or information that's provided under the standards would provide the information about the enterprise value. And then when these two sets of information or reports are available, then investors can evaluate the entity and compare one entity with another. Whereas the need for the information need of other stakeholders, jurisdictions can consider to add or put in further requirements. For example, they can consider the GRI framework or other frameworks just to add on to the requirements. But primarily the investor-driven information would be available within the sustainability reporting. That would be is based on the ISSB standards, and the financial statements that are either based on IFRS or US GAAP. So on the basis of a recognized framework. So this is the building block approach of ISSB. In terms of the architecture of the standards, the standards that ISSB has proposed and would be developing in future. So they have started with a general standard, which is IFRS S1, which I would be explaining in the coming slides. And then they would be developing, they have developed and they would be further developing thematic standards. So thematic means they have developed a standard on climate disclosures. They would also identify other themes on which standards or disclosures around sustainability risks and opportunities could be relevant. So for example, around water as an example. So they might come out with a standard on water and other themes. And then they will also develop standards or issue standards that are industry specific. So there could be a disclosure, certain disclosure requirements that could be only required for the, let's say, financial sector, or there could be different disclosure requirements for the industrial manufacturing entity, for a textile manufacturer. So they would be coming out with the industry specific requirements. Because earlier I mentioned that they are primarily consolidating the work that has already been done. So SASB, Sustainability Accounting Standards Board, has already developed industry-specific standards, and they have developed standards for 77 different industries. So those standards are available with ISSB, and ISSB as a starting point would be using those standards and issuing the standards for which are industry-specific. So this is the idea of ISSB, and they would be moving on these lines. So far they have issued, as we know, two standards. One is a general standard, another is a thematic standard on the climate, and we are discussing both the standards in today's session. In terms of the layout or content of the standards, basically, again, using the work of an organization that has been involved in sustainability-related framework development, that is TCDF. They have utilized the TCFT. They have utilized the work that has been done by TCFT, and the standards that we would be looking today and in future as well would be based around these four pillars. So entities would be required to provide information about the governance, strategy, risk management, and lastly the targets and metrics around sustainability risks and opportunities. And I would explain these in context of IFRS S1, the first standard, and then in the next presentation we will have a more detailed look around climate related disclosures. So every standard that ISSB would issue would cover or require entities to provide information around these four areas. And then there would be some specific disclosure requirements for each theme or industry. So to start with IFRS S1 or Sustainability Disclosure Standard 1, which outlines the general requirements for the preparation of sustainability reports or reporting. It requires the entities to provide material information about significant sustainability related risks and opportunities that could impact the enterprise value. And enterprise value is explained by ISSB as sum of market value, that's market capitalization of an entity, and its net debt. So basically this is the value which an investor is considering when making a, let's say, buying decision about the entity or selling decision about the entity. It's the value of the organization that's considered by the investor. So there are a few concepts in these lines. So one is material, the second is significant, and then the significant risk and opportunities, and lastly enterprise value, as I mentioned. So material, I will explain further in another slide. So material is primarily conceptually similar to what we consider for the financial reporting. So any information that is if omitted or misconstrued or could impact the decision making of the investors. So material is on the similar lines. Significant, then if something is significant, then it will become material. So for example, climate is identified as a topic which could have some sort of impacts on an entity. So first the entity will consider the topic, then it will consider the risks that can arise from the climate. For example, it will consider that whether because of the rising temperatures there could be any impact on the operations of the entity, or because of some changes in the laws related to climate or emissions, there could be an impact on the entity or not. So then the entity will identify the risks, and then the entity would consider whether those risks are significant or not. And if they are significant, then the entity will provide the material information about those risks or opportunities. In terms of, these are the risks. So an example of an opportunity could be that, for example, the rising temperature can be an example. Because of the rising temperature, an entity might have an opportunity to develop some sort of technology. So it can innovate and come out with some new technology, and it can market or sell that. So it's an opportunity for an entity. Similarly, entities who are in the agriculture sector might consider growing crops twice a year because of the temperatures, rising temperatures, and they can use the temperatures for their benefit. So this is an example of an opportunity that can be linked to sustainability or ESG related area. And enterprise value, as I mentioned, because the focus of sustainability reporting is towards investors, so they have linked that this information would be relevant if it's impacting the enterprise value. In terms of the content of the standard, I have listed down the key aspects that have been discussed within the standard. So it discusses the reporting entity, reporting period, and the statement of compliance, the disclosures. This is an important aspect. Then materiality, use of estimates, the core contents, etc. So I would be discussing or highlighting some aspects in coming slides. So starting with the explanation that how it's connected to financial reporting, because as I mentioned that it's investor driven, so the information has to be provided at the same time when the financial statements are provided. So it's in this way linked to the financial reporting or corporate reporting. Firstly, it's applicable to all frameworks. So if an entity is preparing financial statements as per US GAAP, or for example, as per IFRS for SMEs or any other framework, it can use these standards. So these are, you can say, financial reporting neutral standards can be used by all the entities. Then I mentioned that it's for the same entity that is preparing the financial statements. So the same entity, same reporting period, and for the same timeline. So the information has to be disseminated along with the financial statements. And lastly, it's connected with the financial reporting, because entities with the corporate reporting, because the entities generally provide general purpose financial reporting information to the market, and sustainability reporting would be part of that. So the core contents of the standard. There are 4 core contents, and these are based on TCFD framework. Yes, okay, as I explained earlier, that the structure of the standard would include these 4 contents. So IFRS S1, or Sustainability Standard 1, highlights that the entity needs to disclose information about its governance, strategy, risk management, and targets and metrics. In terms of strategy governance, it needs to highlight that who is responsible for sustainability related risks and opportunities. So if I can give an example, the board of directors are responsible for overseeing the company, and then an entity might disclose it under the board. There's a specific committee that is looking into sustainability related areas. So it could be named as an example, risk management committee or a sustainability committee. So the entities need to provide this information, and then they also need to provide information about the role of the management, how management is involved in sustainability related risks and opportunities. So management might be involved through daily operations. So there needs to be an explanation about the role of the management. Then moving towards strategy, under the strategy, the entities would require disclosure that's around the significant risks and opportunities that they have identified. What's the impact of those risks and opportunities? What is the time horizon? And how the entity has modeled or structured strategy to handle the risks and opportunities. So for example, if we say that climate was a topic again, and the risks identified could be regulatory, there could be regulatory changes. The risks identified could be floods or rising temperatures. These could be the examples of risks. Then the entity would be required to provide the impact of these risks. So what could be the impact of rising temperature or flood? So, and again, an example could be, there could be supply chain disruptions, there could be higher cost of production. So these are sort of risks that can be linked to the impacts that can be linked to the risks. Then the entity will provide its strategy to handle those risks. So this would be the flow of information. Entities would also be required to provide their resilience, that how much resilient they are to the risk, and for this they would have to provide information based on the scenarios. So for example, if the temperature is increasing by 2 degrees, so what could be the impact on their operations, on their entire value chain, and vice versa, if the temperature increases by 5%, what could be the impact? So in this way, they have to provide information under the strategy, and they also need to provide information about the time horizon. For example, if the rising temperatures is an example of risk, then what's the time horizon on which they can consider that it is going to impact them? So let's say it can impact them for in coming 20 years or in 30 years. So they have to consider that as well. Around strategy, information would also be required in terms of the financial planning of entity. So what could be the financial impact of these risks on entity? As an example, if there could be obsolescence of assets, there could be increased costs. So they also need to factor in that. They might require acquisition of some new resources in terms of technology, etc. So they need to provide information in the strategy portion. Risk management is basically, again, the sustainability risks that have been identified, and how management evaluates those risks, how management considers the impact and prioritizes those risks. So generally, entities have enterprise risk management, and then they would be considering that what sustainability risks or opportunities can be factored in the risk management process, how what could be the impact of those elements. So entire process needs an explanation within the sustainability report. Moving towards the targets and matrices, then the entity would be required to provide information about targets. So for example, if the target is to reduce emissions by a certain percentage, the entity would be disclosing that information. And then the entity would also be providing information that how it's meeting those targets. So have has it decreased or not in the year or not, it will disclose that. So the targets and metrics would be more of a qualitative information, quantitative information on the significant areas. So to give you an example, I think Fahimza will further explain this on the climate-related presentation. If emissions are at certain level, then entity would provide information that what are the sources of these emissions, how it's going to cut down the numbers in the coming periods, and what's the time horizon for achieving the targets. Some other key aspects of the standard are that it's for the reporting entity is the same entity that is preparing the financial statements. So for example, if an entity is preparing standalone separate financial statements as well as consolidated financial statements, so it would be considered reporting entity for two sets of financial statements, and it would be preparing a sustainability report for itself as well as a sustainability report on the consolidated basis. The sustainability report has to be for the same period. The standard outlines that it has to be on the annual basis. It does not mention interim period, so the idea is that annual reporting would be required. However, jurisdictions can prescribe other time periods. The concept of materiality is primarily similar to what we have in the financial statements, and it is anything that would impact the decision maker and it's linked to the enterprise value. However, I think this is an area which we can discuss with during the Q&A session, because how this materiality under the sustainability reporting would interact with the financial reporting materiality. So this can be discussed during the Q&A session. Then the entities, if they have complied with the sustainability standards, or they can mention that they have complied, like we do in the financial reporting. And in terms of the comparative information would be generally required. However, there are two exceptions. One, when we would be adopting for the first time, so in the first year of adoption, comparative information would not be required, and it might not be required in case we are not able to provide information in the coming periods. So any item that cannot be disclosed, or the data is not available for the earlier period, there is an exception. In terms of identification of relevant disclosures, another important aspect of the standard is that it requires information about the complete value chain. So if an entity has sustainability related risks, it means that it has to consider the upstream, downstream, and the environment as well as its own operations. So the risks that it is facing because of its operations, the risks that it might face because of its, for example, suppliers, the risks it could face because of its customers, and as by environment we can say that the government's intervention. So all these factors need to be considered when evaluating the sustainability risks, and I think it's, in my view, one of the most challenging aspect of the requirements. So in terms of relevant disclosures, the hierarchy is similar to what we have in accounting standards in IAS 8. So we will be starting with the general requirements, then we will move to the specific requirement that discusses that area. So for example, we have the climate related standard. This is the ISSB standard, and in case some information or some areas identified on which so far ISSB has not issued a standard, then the entities would need to consider the information or literature that's available in other frameworks. So they would be looking at SASB, they would be looking at industry practice, they would be also required to look at ISSB guidance. So the idea is similar to financial reporting, but because this is a new topic, so again, this would be a challenge. In terms of where the sustainability information can be provided, the board in the proposed standard has not specified any location. So it can be provided as an example within the management commentary in the annual report. So normally we provide management commentary along with the financial statements in the annual report, so it can be covered in the management commentary. It can also be provided separately in the form of a sustainability report, independent or separately from the management commentary and financial statements. However, what is required is that there should be a linkage between the information that's provided in the sustainability report and the financial statements. So anything that's impacting the financial statements because of sustainability related risks and opportunities needs to be linked. In terms of presentation, as I mentioned that on each area, the standard requires information about governance, strategy, risk management, and matrix. So the matrix, for example, one area would be different from others, and similarly, strategy on one area might be different from the other. So entity can provide separately. So for example, climate-related areas could be covered separately in terms of strategy, risk management, and governance, or they can provide the general information about governance, and then they can specifically segregate the information about strategy. So this is up to entities at whatever they feel best. In terms of the effective date of IFRS 1, the effective date has not been prescribed by the board. It would be up to the jurisdictions and the regulators to consider the effective date. So in Pakistan, the relevant regulator would need to consider the readiness of the entities, and then they can go for a specific date. Because as I mentioned, it is generally and globally recognized that this is a new area for many companies and individuals. So that's why they have not mentioned a specific date. However, as I mentioned, the final set of standards are expected in next 6 to 8 months. So by end of this year, they have mentioned that they will be issuing the final set of these 2 standards that have been proposed. Whether the requirements of sustainability or reporting of sustainability has to be audited, again, it's not the sustainability board's mandate to prescribe audit related requirements. The idea is that the local jurisdictions or regulators will prescribe the assurance related requirements. However, the International Auditing and Assurance Standard Board is working aggressively on this topic, and it's part of their work plan. So similar to what ISSB is doing around sustainability reporting, the Auditing and Assurance Standards Board that issues the international standards on auditing and assurance, etc., they are working on this area. We have ISA 3000. We also have ISA 3410 on greenhouse emissions, etc., their assurance. But they're also working that how to improve the existing standards and whether to bring in new standards that would be focusing on specific areas, and how, what sort of challenges auditors might face when they would be auditing the sustainability related reporting. So they are working on that. So this ends my presentation. Thank you.
Thank you, Sohail, for a very insightful presentation.